Let me get to Jon Erlichman, though, because he's looking through all these headlines. Jon, our senior West Coast correspondent. Jon, interesting here, you've got a beat on the bottom line, and also I'm looking here a beat on the top line as well.
Yeah, and I'd like to go back to that announcement on what they are doing with their cash, because everyone has been wondering what they would do. Apple decides that they're going to put out their quarterly results and also announce this plan for the cash. So just as a reminder, remember there was all the pressure from David Einhorn, the activist investor, to put some of the cash to work. They had already said last year that they were going to utilize $45 billion of their cash over a 3-year period. What they are now saying is that they're going to increase that program by $55 billion. So that becomes basically a program of returning about $100 billion of their cash by the end of calendar 2015. This is a company that coming into this quarter had more than $90 billion in cash in the U.S. So $90 billion plus of cash that they could put immediately to work without, tax ramifications. But let's go back to the earnings now. So here's a company that, with the outlook really important, is seeing $33.5 to $35.5 billion in revenue for the third quarter. This is a company that was expected to generate 38+ billion in that third quarter. So it looks like the outlook on revenue falls short of estimates, but the revenue for the second quarter of $43.6 billion is above the $42.3 billion estimate. So just to be clear, Apple today is reporting its second quarter results. The top line there, better than estimated. The guidance the company is giving us for the third quarter is lower than what Wall Street was looking for, suggesting there is some momentum coming out of the Apple machine. Talking about some of the specific products that they sold during the quarter to give you a little bit more light on this, Apple sold 37.4 million iPhones in this second quarter. Now, Wall Street was looking for 35.4 million. So it looks like they sold 2 million more iPhones than what, on average, analysts on Wall Street expected. Still not the same number that we saw in the first quarter, almost 48 million. But the iPhone sales pretty strong, and it's a very important financial product financially for them. As for the iPads, they sold 19.5 million in that quarter. 18.5 million was the estimate on Wall Street. So I think what you see in fueling the top line performance in this second quarter is the fact that both the iPhone and iPad sales shipments were higher than what on average Wall Street was looking for. The Macs and iPods become secondary stories now, but they said the company sold just under 4 million Macs, which is pretty much along with what we've been seeing from the company over the last few months or the last few quarters. On the guidance side, remember I told you that the revenue number of between 33.5 and 35.5 billion does fall easily short of what Wall Street was looking for. The gross margin issue, let's see if that factors in. They're talking about a gross margin for this third quarter that they're forecasting between 36 and 37%. The gross margin estimate on Wall Street was 38.8%. So Adam was asking this question earlier about whether the shift in the focus and the pricing affects their bottom line. It looks like the gross margin that Apple is forecasting is well below what Wall Street was looking for. They're talking about operating expenses, by the way, during that period of 3.85 billion to 3.95 billion. But, I think a lot of people are going to pay attention to the fact that they've just come out and said, we're putting a lot of our money to work. We told you we were thinking about it, and now we're making that actionable. Maybe they're choosing today because the outlook for the third quarter is not so rosy. Betty?